First of all, once again, welcome everyone to CoCoon. I'm Theodore Ma, co-founder of CoCoon. And for those who are first time here, I'd like to give you a quick introduction of what CoCoon is. CoCoon is Hong Kong's largest co-working space and physical entrepreneur community. Here at CoCoon, we have three simple objectives. Help entrepreneurs find co-founders, source or provide freelance work through our CoCoon market, and last but not least, help entrepreneurs find potential investors. So we try to achieve these objectives by hosting and co-hosting many entrepreneur-related events, whereby those who are interested in the area of startup can meet and exchange ideas. This afternoon's event is one of those events. We're very fortunate to have Mr. Dave McClure, founding partner of the Global Accelerator and seed fund 500 startups, to share with us his views in what's trending in Silicon Valley and including the impact of the lean startup movement. I think I won't need to tell our audience what 500 startups is. With over 100 people on waitlist to this event, I'm sure if you don't know who he is, they are willing to take your seat. However, I'd like to draw your attention to Dave's blog, 500 Hats. May I have a quick show of hands, like who's read Dave's blog here? Ooh, okay, so around half. Then I have to recommend to the other half that you've got to read Dave's blog. Dave's blog, yes. I personally find his recent article, actually it was just today's article, very insightful. And let me attempt to paraphrase a few ideas. This article is about how failure is not the worst thing that can happen to entrepreneurs. It's when we try to sustain the image of success and try to keep up with the rest that gives us that kind of unbearable fear. I can see what he's saying and feel that way sometimes. What strikes me most is that he admits he gets scared too. And who would think Dave would get scared given his experience? And I must say, I'm really impressed with his openness. Like most of you, today's my first time meeting him, but I can already feel his authentic and passionate spirit in working with entrepreneurs. Anyhow, without further ado, let's hear straight from the person who inspires thousands of entrepreneurs in Silicon Valley, and who's now here to inspire you, Hong Kong entrepreneurs, today. Dave.
I'm a little scared after that intro. Thank you guys all for coming, and actually this is my third trip to Hong Kong. I guess I was here one time before I was in the startup scene, but came here in 2009 and then 2011, so hope to make it more than an every other year trip going forward. Did anyone see the talk I did this morning? Because I'm doing the same talk that I gave it this morning, so I hope you guys weren't there and I'm not as bored as I think. I'm going to talk a little bit about some things about 500 startups, a little bit about trends in the Valley in investing, and then happy to take questions and comments or even heckle. So you guys know how to heckle? No, it doesn't sound like it. Anybody really know how to heckle here? Yeah, there you go. That's better. Casey, hi. How you doing, Casey? All right. So I'll try to get through the commercial quickly. Wow, that looks like crap. What is going on there? All right. This might be the wrong font on this presentation, but I'll try. All right. So I started out as an engineer. Was an entrepreneur for a little bit. I kind of had a crappy and small exit, but I got an exit instead of personal bankruptcy, so I'm really happy about that. Ended up being a marketer at PayPal for a few years, just prior to the company going public and then getting acquired. I made a little bit of money out of that and started doing angel investing from 2004 to 2008. Had probably three decent wins out of that. Mint.com, SlideShare, and just recently Masher. And then I tried to start a fund for the first time in summer of 2008. And that was not a good time to start a fund. But ended up this dude named Sean Parker gave me a job instead of starting a fund. Working for Sean Parker is an an interesting experience. We can talk about that over beers later if you're interested. But I owe him a big favor. I got my first professional gig in venture capital in fall of 2008 when the world was crashing around all of our ears, and I think I was literally the only person hired in venture capital at that time. At Founders Fund, I got to manage a small portfolio, got to take over the Facebook fund for a summer, and also made some investments in some great companies there. Twilio, Wildfire Interactive, which was acquired by Google for about $350 million last year, and a bunch of other ones. And then started 500 startups in 2010, which is what we're doing now. And the two smiling faces that you see there, Ray Ma is on the left. Ray's over there. Wave, Ray. Ray's smarter than she is fabulously looking. Kylie Ang, I think some of you may have met Kylie. He's out in Malaysia. Is actually just officially joined us yesterday, although he'd been an entrepreneur in residence with us before. He's been an entrepreneur in Malaysia for many years. Anyway, because also we have a little bit of money under management. We've been pretty active, somewhat unofficially now, over 500 companies, at least a few of which are still alive. We have an investment here in hometown hero 9gag. How many folks are fans of 9gag? Hope to see Ray Chan and some folks later tonight. Yeah, all right. Anyway, we're pretty active all over the world. We've done investments in over 30 countries. Just recently made our first investment in Africa. And about 2/3 of our current accelerator batch is actually from outside the US. So even though we do a lot of our investments in and around Silicon Valley, we're probably one of the most active funds internationally, probably the most active fund internationally from Silicon Valley. All right, that's it for the commercials. So what I want to talk about is how dismally disappointing the asset class of venture capital is and how just terrible we are as VCs in selecting and picking companies. Usually VCs get up here and tell you how awesome they are and how much entrepreneurs suck and need to think bigger and go after greater stuff. And the reality is, for the most part, VCs are not golden gods, and the history of the asset class and performance has been pretty fucking terrible. By the way, sorry, I have a potty mouth in front of you with delicate sensibilities. You shouldn't be here, but I'll try and keep my swearing to a minimum. So what I want to talk about is kind of this lot of little bet strategy, or Moneyball for startups. I've written a little bit about that. The main concepts are just that it's become very inexpensive to do at least product experiments, maybe not businesses. There's a lot more people online, which makes it easier to get to customers, but failure rates are still pretty high. So using that kind of backdrop, I'll drill into this a little bit more, but product costs much lower, lots more folks online, easier to get to, hopefully more measurable as well, but failure is still pretty common. In fact, probably more than 50%, possibly up to 80% of our investments fail outright. Hopefully we make some money on maybe about 20 to 30% of them. Probably the majority of the money we make will come from a very small amount, maybe only 5% to 10% of the portfolio. So that kind of and by the way, these changes have happened over a relatively short period of time. Venture capital as an asset class has been around for maybe between 40 to 60 years, depending on how you look at it. But a lot of these changes in the market, starting maybe around 2000 timeframe, significant reductions in cost because you don't have to buy Sun servers, license expensive database software or other types of software, and you generally have to pay a lot less for pipe, for bandwidth. So those costs, which 10 years ago used to require pretty much $3 to $5 million to get a software company off the ground, those costs have come down by at least 1, if not 2 orders of magnitude. So a lot of initial product experimentation can be done probably on anywhere from, say, 3 to 12 person months with a team of 2 or 3 people. So a lot of the accelerator timeframes that we typically operate on are about 4 to 6 months, teams of 2 or 3 people, depending on what costs to keep you alive in ramen and rental. That might be anywhere from $10,000 to $75,000 U.S. equivalent, depending on your geography. So you can do a lot of experimentation in a fairly short period of time. There's a lot of underlying plumbing and architecture from other companies like Amazon and Google and Facebook and Twitter, et cetera, et cetera. So in that perspective, best of all possible worlds, life is very good. However, most things, again, still fail. So we probably don't need to be spending $5 million in the first investment. We probably don't even need to be spending $500,000 in the first investment. We want to, until we de-risk the product, the team, the market, whatever, probably make small experiments, small bets, maybe around $25,000 to $100,000 in the first investment, maybe $250,000 to $1 million on the second check, assuming the company makes some progress, and then sort of get into traditional venture, maybe $1 to $5 million investments or more. So that's kind of the high-level thesis about what I'm going to talk about for the rest of this 30 to 45 minutes. Again, if you guys have questions, comments, heckles, lectures, etc., feel free to jump in. All right, so everybody is enamored with technology. We're worshiping the next Mark Zuckerberg, the next Steve Jobs, the next whatever. But actually, I think the thing that's really interesting about the web or about mobile and other software technologies these days is not the technology part. It's the ability to get feedback from customers in a very short period of time. So almost within days or weeks, sometimes even within hours, you can ship products, measure the results, and get a feedback loop on how bad you suck or how bad you don't suck, and use that as a way to modify your product or your marketing. And I think this is a point that's lost on people a lot. They tend to get enamored with the technology and not on the ability to get customer feedback and therefore modify your product or modify your marketing. A lot of times people think the whole lean startup movement more in terms of product, but actually the marketing and the communication you have to customers is sometimes as important, maybe even more important than the product itself. As an example, if you were starting a company that did online diapers and your market was women between the ages of 20 and 35, do you think that product would have reasonable receptivity with that audience? Yes? No? Yes? Okay, great. I think the answer would be yes. Now how about guys between the ages of 12 to 20? Probably not. Product's the same, market's different. Maybe the marketing's the same, you're going to have a much greater amount of fail. Now how about women between the ages of 50 and 65? Do you think it's interesting for them?
No. The child diapers? Or?
No, or what? Damn, you stole my line. Hold on. Sorry. So the idea there was trying to get you to think in the grandma, like you think no, but then actually that audience is great if they're grandmas. And then I was going to shift to the men 60 to 90 and say, actually, it's a great audience for online diapers. Stole my thunder. So yeah, I think that people underestimate the marketing side of the equation quite a bit. Since I kind of had a little bit of a curious path where I'm at these days. Some might say I have a tough time holding down a job, but I started out as an engineer, then became an entrepreneur, then kind of shifted into the marketing side. And there's not too many people who go from that direction, right? And so I felt like I sort of got a reasonable handle on the engineering side of the world, but the marketing side has been probably more interesting, more fascinating, at least in terms of how you communicate with people and how you understand their needs in the market. All right, enough on that. So for those of you who are into reading books, I don't often have a long enough attention span. The authors there, Bill James on the left, if you're a baseball stats fan, that's probably interesting reading. If you're not a baseball stats fan, I wouldn't recommend it. Moneyball is a book and a movie that's about the Oakland A's and about Billy Beane, who's a manager, developing a different way of identifying talent in the major leagues. The Oakland A's had a very small budget compared to some of the other major league teams, but they were able to be very effective over a consistent period of time in getting at least to the playoffs, if not to the World Series. Pretty sure most of you have heard of Eric Ries and the Lean Startup. The last one there is a book called Little Bets by Peter Sims. And a lot of the talk that I have is kind of taken from some of the stuff he's involved with. That's not just in terms of venture capital, it's in terms of lots of different walks of life. So this idea is really based on, to some extent, collecting data, but on the other side of it, it's just on the fact that, hey, we screw this up pretty often and we fail pretty often, so why are we making million-dollar bets on things that we know have a high fail rate? I really believe that the venture capital industry has not been responsive to the changes in the market, which now allow you to do experimentation on a much smaller size basis. They've been responsive to management fees and their ability to raise money. And so you've had very large funds, several hundred million, in some cases even $1 billion, with not necessarily great track records, making a lot of money just on management fees, typically between 2 to 3% of funds under management. That's per year, without necessarily having a lot of success. And I think there are other folks, I see someone wearing a YC shirt there, make products people want. Yes, I believe you. Right. So I think the modern day model, probably two groups in particular. First Round Capital, Josh Koppelman, starting around 2003 or 4, maybe Ron Conway slightly before him, and then Paul Graham with YC, kind of pioneered this model of doing smaller bets. In particular, I think Ron from maybe even as far back as the mid to late 90s, and Josh Koppelman starting around 2003-4 with First Round Capital, and Paul Graham in 2005. And the idea there is just to probably bet smaller than the larger $1 million checks that used to be written as the first money in Series A, and start focusing on whether people can make progress on $50,000 to $500,000 bets. And if they do make progress, then continue investing. So that sort of storyline visually, from our fund perspective, we're doing about 250 investments per fund. We're on our second fund right now, and we've actually mostly selected the companies that are going to be part of the second fund. We're only expecting that really about 20% of those companies will have some significant level of success, either raising or in outcomes. Typically, we'll do 250 companies in that small 50 to 100K check range. We'll probably write a second check for maybe 100 of those, and maybe a third check for between 30 to 60 of those. And what we're hoping for is that we might have small exits, probably in the range of 100 million or more on a 5 to 10% of the time frequency, and maybe smaller exits than that, less than 100 million, hopefully maybe up to 20%, maybe more if we're lucky. But we're not expecting a lot more than that. And we're not modeling for billion-dollar outcomes. Traditionally, venture funds usually making maybe about 30 to 40 investments per fund over a period of 3 to 4 years on the initial investment, and they're aiming for, let's say, anywhere from $2 to $5 billion outcomes, 2 to 5 $1 billion or more outcomes. That's pretty hard. Actually, it doesn't happen very often at all. And so our feeling is that there's a lot more sub-$100 million exits in the market, and a few exits that might be north of 100 million, although maybe not that much higher than 100 million. And so that's kind of how we model our fund. The shorthand way to think about that is that 5% of our investments do 20x, 20% of our investments do 5x. If you add that up, that's 2x. And if we do that in a short enough period of time, maybe we beat the risk-adjusted return alternatives of a more liquid asset class like stocks or bonds. But like I said, historically, venture capital, probably half of venture capital has not returned even 1x their money. Another quarter has probably barely returned slightly more than 1x. And for venture capital funds, typically are 10-year illiquid vehicles. That means you put your money in, and 10 years later you might get some money out. So that's a pretty risky thing to do. And generally, the target for venture capital funds is about a 20% annual rate of return or better in order to beat other less illiquid asset classes. Unfortunately, less than probably 20 to 25% of venture capital funds actually achieve that. They'll probably really only maybe like around 10% of it. So whenever you see venture capitalists get up and start acting like they're golden gods, you should probably ask them if they think their success rate is any better than the average entrepreneur. And usually, it's probably about the same or worse. Yeah. So this is kind of just a look. Sorry, that really sucks. This is a look at the various players in the overall ecosystem, starting from the top to the bottom. Those are small to large. And a lot of the incubation and seed stuff didn't really used to exist as a structured, formal process much more than, say, 5 to 10 years ago. It feels like that's a very structured process now, but it wasn't really that long ago that Paul Graham was looked at as kind of like a crazy person. Say even as late as maybe 2008, 9, 10, it wasn't obvious that Dropbox and Airbnb were big wins, and people thought that folks who were going to incubators were maybe the less capable entrepreneurs, and really the best entrepreneurs went directly to venture capitalists. And now a lot of folks who already have money might still come through an incubator or accelerator process, or might at least go to an angel to raise their first amount of capital before going to traditional VCs. And at each point in this kind of stage, you'll hear Josh Kaufman talk a little bit about getting a ticket on the train and being able to step off at any point. There's lots of companies that may not get to billion-dollar outcomes, but still have sort of interesting acquisitions that say between 3 to 5 million on the low end, maybe 30 to 50 million on the high end. Those could be great returns for early angel investors, certainly for the founders themselves. So there's a tendency for the person talking to frame what's good or not good in terms of the size of their fund and their outcomes. So large funds tend to say that billion-dollar outcomes are the thing that people should be aiming for. Make sure you are doing meaningful things for the economy, and don't waste time on these piddly-ass businesses that you flip for 30 million. And generally, I think they're full of shit and very biased based on their own size of fund. The fact of the matter is, the global economy, probably more than 50% of the global economy, is made up of small business. Most of those businesses are not venture financeable, but most of the jobs in our global economy are created by small proprietors who probably only employ between 1 to 25 people. So it's not a bad thing that you're doing a small business. It's actually a great thing. It's the most common thing to employ people. It just so happens that certain types of businesses can make money for investors, and the people talking tend to be the investors. So we tend to bias our commentary about what things are wonderful and good in the world based on how we make money, not on how the world makes money. Sorry, I'm getting a little bit ranty here. So AngelList. How many folks here have heard of AngelList? Yeah, great. So second after Paul Graham and YC, I would say AngelList probably has had the most impact on the startup financing ecosystem anyway. They've all run around, who's pictured there. Contrary to its name, AngelList is not just for angels. A lot of VCs use AngelList. It's a really tremendous way for startup companies and investors to meet each other, get to know each other, and it's had sort of a dramatic impact on both investors outside Silicon Valley and New York and companies outside Silicon Valley and New York getting visibility. It is the case that most of the activity that's happening are still concentrated in sort of those tech capitals and investment capitals. But we found a company from Croatia on AngelList that was doing web analytics for dairy farms and cows. We've put most all of our companies on AngelList after we invest in them. We probably source about 10 to 20% of our overall deal flow through AngelList. Full disclosure, I have an involvement with the company as an advisor and perhaps other ways, but I really do think that it's changing the way that venture capital and particularly angel investors operate. So let me talk a little bit about how we make decisions. Our fund in particular, we try and invest after there is a functional prototype, but before there is a level of traction, quote unquote, when other investors might more obviously jump in. There's several risk reduction points that we think happen. One of them is getting a product out the door, or at least functional. Another one is getting first customer that isn't your mom, or first user, I guess I should say. Another one is getting the first dollar, and then beyond that, scaling up the number of users or customers, getting to profitability perhaps, or getting to large growth stage. But the first point in that process is not, at least for us, it's not an idea or a concept. So a lot of folks will come up and pitch me about, hey, here's an idea, what do you think about that idea? And like, my opinion doesn't really matter. The customer's opinions matter, or the user opinions matter. And so we don't generally invest in companies at the thought or napkin stage unless they've had previous product success. For us, that ability to get a product out the door is a huge risk point. If you're a first-time entrepreneur, because the costs are so low in building products, we usually would like you to figure out a sweat equity way to get to product completion, either on your own savings or on no money spent whatsoever. And it's not the case for all types of products, but for a lot of products now, a basic functional prototype can probably be built at least in a matter of months, sometimes even weeks. And you get to a level of testability with the customer that we think is really important. And again, it might be the marketing as much as the product that you're testing with the customer. In fact, in a perfect world, you probably wouldn't even build the product. You'd actually just build simulations of what the product might look like, or emotional states of the customer after using the product, and test for the market's response to that. So when we were, I was advisor part-time for Mint for a little bit, and the product was actually behind getting out the door. And so we were kind of in marketing trying to figure out what the fuck we should do while the engineers were still building the product. And so we started doing landing page tests with keyword advertising just to an image, and then trying to collect emails, which is a little weird experience, right? You're advertising people to come to a page where they think they're going to get a product, and you say, oh, sorry, the product's not ready yet. Would you like to sign up for this product? We'll send you more information when it's ready. And we were able to learn quite a bit about the way we were advertising for that customer and the images and text we were using in combination, which is really just driving emotional state. So in a perfect world, you would probably actually build the marketing first and then build the product after you validated that the marketing is interesting to customers. But generally speaking, most people don't do that. So does the product work functionally? Are there people using it? Are some of those people paying for it? Are your unit economics profitable? Can you find scalable channels of marketing? Those are sort of the successive things that we're going to be looking at to understand how can you grow that business. I shorthand that with product market revenue. Do you have a product? Is there a market? Are you making revenue? And then kind of scaling up from there, both to large scale usage as well as to maybe profitability. One important point about timing, a lot of people don't think about unit economics. What do you think a customer is worth? What do you think it costs to get a customer? The other thing they don't think about is what's the timing of that. So you can have scenarios where you have a profitable business, but it might take you 6 months to get to profitability. For example, let's say I have a subscription commerce business where the customer is paying $10 a month, and the customer acquisition costs are effectively $50 to $60. So if the customer lifetime value is 7 months or more, that's a profitable business. But you may be financing your way to profitability for the first 6 months. You either have to borrow or finance somehow that stretch of the first 6 months worth of customer acquisition costs to get to profitability. Conversely, let's say, this is an actual example, we have a business that's doing custom organic coffee. They take the order and get the money before they actually have to pay for the goods that they ship. Great business. You don't have to finance that. In fact, you probably want to get as many orders as you can that you think you can still fulfill within a reasonable period of time. So there's a lot to understanding that equation of customer acquisition cost and revenue generated and the timing of both of those that then drive what the structure of your business is, what the structure of your financing is, what the types and methods of marketing that you might do come out of that. For businesses where they're very low dollars per customer, a lot of social media businesses, Facebook and others might only be generating $1 to $5 per year in monetization per user. You can't really buy those customers for very much and sort of make that business work. So a lot of the marketing for very low customer revenue per year is organic or viral marketing. Conversely, if you're like selling to a customer that's buying a consumer electronics product or a car or a house or a financial services product, those customers are worth a lot. And you don't need to do viral marketing necessarily. You could actually do paid acquisition to those customers where you're buying the customer effectively for $50 to $500 and you're making a lot more money on that customer over the lifetime. So without going too much into the detail, I would encourage you guys to think a lot more about understanding unit economics, timing of revenue and cost, and then how you're thinking about the marketing and customer acquisition channels for those customers, at least as much as you think about the product development and design part. So I want to continue emphasizing that the marketing side of the equation is at least as interesting, if not more so, than some of the technology side. Now, why do I want to emphasize that? There are a lot of businesses out there that I think are probably operating under brick and mortar sort of rules. which is to say they generally have high overhead costs and they are inefficient at doing internet marketing. Now, again, probably no secret to you guys, a lot of people have started using the web, using computers and mobile phones, using tablets, using email, using Twitter, using Facebook. Like dramatic shifts in consumer behavior have been happening over the last 5 to 10 years. We've gone from, say, less than 100 million people online to probably over 3 billion people online in probably less than a decade. Amazing amount of consumer time and shifting to online viewing, pictures, video, texting, et cetera, But for the most part, brick and mortar companies have not responded to that. Now that's an interesting thing, right? We tend to focus a lot on all this technology that's been happening and not so much on this vast shift in consumer behavior online, which isn't really technology so much, it's actually very human behavior. It's mostly people connecting with other humans, maybe some gameplay that's also a little bit, sort of around the psychology of humans. But we have like shifted massive amounts of our time into like a lot of these online worlds where we're communicating with things and other people. But most offline businesses have not responded to that. That's a tremendous opportunity for entrepreneurs. And so, in general, anybody read an essay by Mark Andreessen about software eats the world? Okay, if you haven't read the essay, I highly encourage you to read it. It was about a year, maybe a year and a half ago. Mark Andreessen, who helped create the first web browser, Mosaic, and later went on to start Cloud and now runs a very successful venture capital firm, talked about how we're really in the early stages of technology adoption and software adoption, and how almost every business was going to be impacted by software entrepreneurship. And the thing that I think he was kind of getting to at the essence was a lot of these brick and mortar businesses are very inefficient about how they operate. They have high overhead costs, and in particular I would say they're not good at doing internet marketing. Right? So if your basic game plan is take an existing business that's offline and operate it on a more efficient overhead structure, probably startups relative to offline businesses, a lot less overhead. And hopefully you might be better at the internet marketing channels than those existing offline businesses. Now there's a few offline businesses which might have a head start on you on internet marketing, but most of them probably don't. And so then it becomes relatively easy, like find a big existing physical presence business, probably figure out if you can have a little bit of points of margin efficiency in building its online equivalent, and figure out how you can do internet marketing better, and then keep their existing business model, right? And then just do that over and over and over again. And the impact to everyone's lives and the economy is incredibly positive. It may not be breakthrough innovation like creating Google Glasses or creating the next drone or creating Bitcoin, but I can tell you, as the parent of a 6- and 8-year-old, when I go to a restaurant and I try and get the waiter's attention, that's actually a real problem that has physical, human impact for me. My kids start fidgeting, I want to get the food, I want to pay the bill, and all these problems are very, very solvable. So somewhat straightforward process improvements to existing businesses, and by the way, everybody tends to eat, a lot of us go out to eat, a lot of us go out to eat very frequently. These are really, really large businesses that are subject to competition and improvement. All right, so if you think about how we make decisions about companies, we can make that decision pretty quickly within a 15 to 30 minute period of time, probably within 1 to 2 meetings. Mostly what we're looking at is your ability to produce a product and perhaps some metrics about your customer base. So usually we're looking for people that are targeting a specific customer demographic and need. Hopefully that problem that they have or the need that they have proxies for some form of monetization. We generally are looking at capital efficient businesses, mostly software. In the mom or your dad to help you pay for some ramen while you do your own case study and see if you can figure that stuff out. And even if you fail, you'll probably learn a lot more about yourself and about building a business than you will from reading about someone else's success. Now the alternative to that, I would say, is go work at a larger successful business, whether it's a startup or not. I had a lot of great personal experiences, useful personal experiences from failing at my own startup and from working at a larger company, PayPal in my case, and eventually eBay, Even though there were frustrating experiences sometimes from working for a large company, it's instructive to be working with an existing successful product line that generates customers and revenue and understand how those customers behave and buy. Like when I started at PayPal, I had the chance to send emails to literally millions of people. Like it was fucking amazing. and scary as shit if you screwed that up. But, like you don't get that as a startup, typically the ability to like punch a button and touch millions of people. But you know, there was an experiment that I did one time where it's like, hey, I think if we change that subject line, we might get a better conversion rate. Or we were changing the background color in an email to simulate like a clickable area. And the change from a noun phrase to a verb phrase and that little yellow box around a clickable background area in an email lifted conversion rate about 20%. Now, normally you're not going to get that kind of lift, you know, from a few improvements. It's just that at that point in time, PayPal emails were so bad that it was easy to improve. But that one change was like about a, you know, literally about a 20% improvement in conversion in one change, which was not generally an engineering big change. It was like change this text line in the email and make this little yellow box around, you know, the content. We started calculating that the bottom line return to the company was about $50 million to $100 million a year from that one fucking change. And I can fuck off the rest of my 3-4 years at PayPal, and I've earned my options. I've earned my equity after that one experiment. I was like, damn, I'm not that much of a fuck up. But that was actually useful for the business. So you get a lot of leverage from doing very small process improvements in large businesses. Now conversely, when I was doing my own startup, I can't begin to tell you the number of things that I screwed up in my own startup, just like numerous, like equity allocation, the people I chose to work with, my ability to lead people, just like setting, you know, product goals, business goals, hiring, just everything. God, I fucked up so many things. And if you are willing to sort of be honest with yourself about like what you're screwing up and hopefully again sort of build a feedback loop on your own behavior, you can actually learn a lot. Like I'm not going to say those were pleasant years, those were very difficult years. We probably almost went bankrupt at least 2 or 3 times. I did payroll on credit card a bunch of times. I had co-founders and employees yell at me and tell me I was an idiot, and most of the time I agreed with them. You know, it's some serious personal growth going through that stuff. And you know, most of the times you're not gonna, you know, die or anything for doing a startup. Actually, that has happened a few times in our portfolio. Not to be a downer on anyone, but we've had 3 founders die in the past 3 years in our portfolio. One somewhat self-inflicted. So I don't think in most cases you need to take it that far, but doing a startup is often an incredible exercise in personal growth. It's certainly more than an experiment in technical proficiency. But it is one of the most creative and amazing things that you can do. And if you get a little bit of success out of it, it can often change your life, whether or not you make any money. So where was I going with all of this? So incubator environments are a chance to observe other people's fail and hopefully not have to experience it yourself, and maybe some of their success. I think the benefit of operating in these environments is not so much that, you know, some professor or some great entrepreneur is going to teach you something, but just that you're in an environment where other people are working on startups and you can learn from their mistakes, they can learn from your mistakes, you can learn from their successes. And sometimes a very chaotic environment might actually be one of the most successful in you learning what's going on. So maybe just some thoughts on that is, I think, you know, when you're combining companies that are working on a lot of these small experiments, you're experimenting with like product development, engineering stack, design and user experience, online marketing, different platforms, pitch coaching, how do I work with partners, business development. There's lots and lots of different things that you can experiment with and understand from both your own behavior and from others' behavior. And like I said, it's pretty much kind of the new business school. It's a lot of the things that maybe business schools profess to teach you about in theory, but very few of which actually teach you in practice. And so because the costs of doing those businesses, creating those businesses, previously it used to take you years and maybe hundreds of thousands, if not millions of dollars to start businesses. These days with digital businesses, you can create those products and go out and get customers in extremely short periods of time with extremely small amounts of dollars. So do so, right? Don't read about other people's stuff, just do your own cheap, small, quick experiments and watch other people's experiments. And hopefully you can learn something. When you're designing those environments, as someone who's put like an incubator together, you want to facilitate more than just geeky people in that environment. You want people who have design and user experience abilities. You want people with analytically driven and creative, marketing driven sort of abilities. You want to involve platform partners that you might have to work with, whether those are technology platforms or non-technology platforms. You may also want to involve entrepreneurs who have been experienced, entrepreneurs who have failed, other mentors from other companies. You want to build an environment or a community that's sort of successful in helping people learn, which may or may not always be successful itself. You may learn from failure as much as from success. I would encourage you to think about how do you make progress in sort of these three basic areas: product, market, revenue. How do you create a product that's interesting to some people? How do you understand and discover access to customers in a variety of markets? And how do you figure out how to make money? Sometimes we lose sight of those last two. And then, obviously, if you're trying to raise money, work on pitch coaching and all that other crap. I'm going to skip the last part of this. I pull this out for just a little bit. It's a non-intuitive thing. So sometimes people want to structure these co-working environments or these incubator environments so that they feel like they're in control. At least my experience has been sometimes when you're out of control but there's a lot of things going on, you actually can learn faster. The analogy I sort of talk about sometimes is like, if you want to be a race car driver, you don't start at 65 and speed up to maybe 85 and think that that's going to teach you how to be Formula One. You actually need to go out and drive at 150 to 200 miles an hour and expect you're going to blow an engine and a tire every once in a while in order to do that. And so there's really this discontinuous sort of type of thing that you need to do, which is not very careful. And particularly in some cultures, there's a default state around being a little too careful. Again, you're not going to die from building an online business. You might look like an idiot every now and then, but a lot of people will go through this thing of like, well, you only get one chance to create a first impression. That's absolute bullshit. You could launch every day for the next 2 years, and you would still probably never reach 99% of your market, right? And so if all you did from now until next year was launch every day and fail 365 times, you would learn a lot. Say you got 1,000 customers every day and you failed miserably every day with 1,000 customers. How many of you would be willing to fail every day for a year with 1,000 customers a day just to be able to learn? Bullshit, you are liars. You say that's true, you would never do that. You're like, oh, I want to get this, I'm going to get this Photoshop perfect. I want to work a little bit. It's not ready yet. I'm not sure if this is going to work, right? Fuck it. You don't care if it works. Launch, goddammit. Put it out there. You're like, oh, people are going to think we're idiots. Yes, they will. And it doesn't matter. You can launch every day and still hundreds of millions of people out there will never have heard of you. In fact, it would take such an amazing amount of incompetence for you to fail on a scale that lots of people would actually recognize you're an idiot. And you know what? That would be good. Believe me, I've done that. Being seen as an idiot for lots and lots and lots of people, one of the scariest fucking things in my life. And one of the best things that ever happened to me. Kid you not, happens all the time, happened 2 weeks ago. Was a complete fucking idiot in front of lots and lots of people, and it was actually a wonderful thing. Just scary as hell when you're going through it. So, anyway, getting back to this thing, there is a chaotic environment that you might want to get used to. This is more like if you're running an incubator. You learn more from this petri dish that has a lot of things going on, and there's somewhat normal distribution of outcomes. So you'll have 10 to 20% of people who have amazing outcomes, 10 to 20% will have terrible outcomes, and a lot of stuff in between. The interesting thing is if you can get 3 to 5 sort of teams or products in that outlier area, they will start competing with each other. When I was teaching a course at Stanford, when we did our first FP Fund incubator, there were sort of like 3 to 5 teams that emerged that were smart, had creative ideas, they did cool stuff, and then the other teams would see that, copy that, try and do some things, and they would get, when we did the Facebook class, there were like 5 different teams that leapfrogged each other in terms of number of installs. And those guys probably would have been successful anyway without us and without that incubator environment. The interesting thing was the next 10 teams, the ones that were the B students, probably wouldn't have been successful on their own, but because they were in an environment where they were watching other successful people be successful, they figured it out and they had successful outcomes, maybe not at the million user install level, but at the hundreds of thousands of user levels. So being in this petri dish where interesting things are going on, both failure and success, helps the folks who aren't necessarily the outliers. And designing for that competition, facilitating that insanity, that craziness, can be actually helpful to a lot of folks. I'm going to move to the end game here. Yeah, we had, in 2009, I ran an incubator for the first time. It was kind of an incredible opportunity for me. We deployed less than $1 million into 22 companies. 8 of them raised successful, raising $500,000 or more. A little bit later, 5 of them got to Series A, 3 of them got to Series B, plus 3 smaller exits. One of them got acquired last year for $350 million. Had 300 people. And I'm not bragging because I say it had anything to do with that. I just happened to be along for the ride. But it was kind of an amazing outcome, right? So, if you look at that stat, sort of which ones actually got to some exits or some institutional capital, probably less than a third, right? So if you were assessing failure there, you'd be like, wow, you got a 30% hit rate. That sucks, right? Except if you're a baseball player, hey, that's pretty good. And if you get 150x outcome out of that, you only have to do that like 2 to 5% of the time to really make that work as on an economic basis. So you have very high fail rates, but very asymmetric outcomes in terms of results. I don't know if we'll have that happen every time, but that was a lesson in, wow, that's really not what I expected to occur. So if we try and get a summary of what does the investment process look like that takes advantage of changes in the recent market, both those reductions in product development costs, the increase in customer access, I would say it's a scalable process for making small bets and then doubling down on the things that actually work. And starting with kind of this incubation stage, product development stage, early customer detection, and then moving up through scalable marketing and hopefully scalable ways of making money. And if I look at that in 3 stages, what that looks like is $25,000 to $100,000 experiments with a small team to either build a product or complete a product and get some basic usage metrics. Maybe not a lot of actual customer, maybe not even revenue, but maybe just usage metrics. And if you are successful in getting a product out the door and getting some number of users or customers, then progress to the next stage. Okay, that next stage is a market validation stage. And now you're really trying to figure out how many potential customers out there are there, what are they willing to pay, what are the costs of the customer acquisition channels that I might be trying to get them to, and then I start to build that equation for the unit economics for the customer and the framework for timing on revenue and expense, right? So if you think in your head, it's like, okay, here's what I think the customer is worth, and you may have to guess at that. There may not be a transaction that's happening just yet, or you may not have optimized that product yet. You may not know how long the customer life cycle is yet, but you guess at a value. And then you start doing some customer acquisition testing, and you start to, again, guess at what it costs or measure some of your costs to build what that customer acquisition looks like. And when you start, it might be out of whack. It might be like, okay, it's costing me $300 to acquire a customer and $50 in customer revenue generated. But maybe you can start to sort of tip that equation or eventually get to the point where it's going to get better. Maybe not. Maybe it costs you $3,000 to acquire a customer, you're generating $3 for that customer. Unless you have order of magnitude improvements in your product or marketing costs, that equation might not ever reach break-even. But when you start to build that framework in your head of here's the revenue potential generated, here's the customer cost of acquisition, these are the channels that I would use to get those customers. Can I scale those channels? Can I improve my cost? Can I increase the customer willingness to pay over the life cycle? then you start to have a framework in your head of what the economics are of the situation, where the battle plan is for building product or doing marketing, and then you start to iterate and test and improve that process. Right? And you may have to take a few leaps for non-intuitive, non-incremental to like, okay, this isn't working, let's ditch that and let's go to a completely different customer segment or a completely different product. Maybe you figure out it's working and or a competitor enters the market or they introduces a new feature and then you have to adjust that whole thing. But there is kind of this process of figuring out what's going on that involves the lay of the land of customers and where your product is. And then if you get to the point where that looks like it's going to scale, then great. Then go to sort of the traditional venture process, really throw big money at it. The expectation here is that you know sort of where you're going. I think what used to happen is we entered this phase when you had no fucking idea where you were going, and this was just like the entry point, the cost to play the game, right? You needed to raise $3 to $5 million to go buy those Sun servers, to go buy that Oracle database software, to go buy space in Exodus for hosting your computers and everything, or getting the bandwidth. It was a really big price tag to get that shit off the ground, and it was probably 18 to 36 months to build packaged software and build a sales process and get out to customers. Starting about 10 years ago, that started changing, right? Dropped by 2 orders of magnitude in the last 10 years, and then we started getting massive amounts of people online buying consumer and small business products and services. The one remaining piece of that that hasn't quite happened is payments online, still a challenge in many developing economies and geographies. It's starting to get mature in the US and the Western market, and it's starting to get mature in certain other international markets. But probably there's still maybe 3 to 5 years of improvements in payments online and maybe some delivery and logistics for physical goods commerce. Once those shoes drop, then the process gets a hell of a lot easier. Monetization will get a lot easier if your assumption is that everyone can pay and I can deliver goods to them reliably. Which leads me to my last point about global businesses. My belief is there's probably going to be 4 global languages. Certainly English as probably the default global language, but Mandarin, Spanish, and Arabic as alternative global languages with large populations. Now everybody sort of knows about Mandarin being a big opportunity. Most people don't think about Spanish or Arabic being large opportunities. Fact of the matter is there's probably 300 to 500 million speakers in Spanish and Arabic. They may not be all online yet. Some of them may have average low GDP. I'm getting you signal to hurry the fuck up. But the interesting thing is those populations tend to be very young, very upwardly mobile, increasingly great internet penetration. And for me as an investor, I'm kind of making a long bet here that over the next 5 to 10 years, those are going to be really interesting audiences to develop products and services for that will change dramatically over the last 10 years. Mandarin and English, somewhat mature markets already. Actually, if you look at the US English-speaking market, not necessarily massive population growth there, although there's more English speakers all the time. Even the Mandarin-speaking market might actually be negative population growth over the next 30 years. And definitely growing GDP, but we might have tapped out that market already. The other two actually quite a bit of growth opportunity. There's obviously lots of different devices that we're going to see using internet services beyond just mobile and tablet. I think you'll see cars, homes, lots of other things, potentially drones that will have internet access. Pretty much assume every living and non-living thing you can touch or see will have identifiable internet access within the next decade, maybe within the next 3 years. I don't have any idea what types of businesses that will generate, but I'm sure there will be a few there. I mentioned the global payment thing. Interesting thing about outbound wealthy Chinese and Indians. So you might think, hey, Mandarin's an interesting market to localize for if I'm going to China. You might not think that Alabama would be an interesting market to localize to Mandarin. But there are lots and lots of Chinese who are sending their kids to college and even like high school and grade school in the US and other places around the world, and probably that will be mirrored with other people from other cultures. So you'll have a lot of high net worth folks traveling all over the globe. And so those global languages will become languages of interest globally, not just in the regions or markets where they start from. I'm probably going long on this. All right, anyway, last commercial there. So if you're interested in pitching me your business, please don't do that right now. get to know someone in 500 startups. That's not likely me. I have a very short attention span. If you're in the greater China market, that's probably Ray, who's in the back of the room. If you're in the Southeast Asia market, that's probably Kylie, who's in Malaysia, but he'll be hopping around lots of places in the next year or two. If you get to come to Silicon Valley sometime, probably don't stalk us, but we'll be doing lots of conferences, events, and you'll get to see a lot of other folks. So I hope that was not too boring for you folks. If we have time left, I'll take a few questions. I don't know if we have a lot of time left. Thank you. That's it? Done? Yes?
You talked about your 20-year path of figuring out
24, 25 years. What a waste of fucking time.
It is on. And in your blog post, you talked about failing
Yep.
at that time.
Yep.
All the best entrepreneurs I've worked with have been 30, 40, 50 years old.
It's true. Generally.
And every recruiter or VC I talk to is obsessed with finding the next Zuckerberg in Houston. What's the deal? Is it the obsession with new bullshit?
You know, I got really lucky sort of finding what I feel like is a modest level of interesting life to live at 45, 46 now. Yeah, I got a great gig. We'll see if I actually get to keep doing it. I still need to show that I can make money as a venture capitalist. That'll probably take me the next 5 years to prove. But most people probably figure a lot of things out a lot earlier. Not to be too ageist, but I would say our sweet spot for investing in entrepreneurs probably is between 25 to 35. We generally are not investing in folks right out of school. We might start doing more of that, but we'd like to see folks who have at least 3 to 5 years working experience, maybe ideally more like 10. If you've been at it for more than 10 years and you haven't found some success already, I'm not sure we're necessarily going to keep betting on that. So that's not saying that there aren't great entrepreneurs in their 40s, but you should probably be demonstrating some success a little bit earlier than I did if you want to generate interesting capital as an investor. I do think that there are, like I said before, there's great experiences to be learned from starting your own business or working for someone else's business for a little while. So I would probably recommend, we wouldn't necessarily bet on entrepreneurs coming right out of college, but it's not a bad bet for the entrepreneur. You could probably learn a lot of stuff starting and failing at your own business as early as 12, 13, 14, 15. My goal for my own kids would be to have them have a revenue-generating website or business probably by the age of 15, so I don't have to pay for college. Yeah, you bet. Hope springs eternal. I certainly think there's lots of talented folks in their older years who might also be successful.
So would you have invested in yourself?
Yeah, tough fucking question, huh? I don't know. Probably, I would have a bias against it. Maybe if I'm foolish, I might bet on myself. He has the mic, and you're raising your hand, so we'll bump up to you right after that.
Dave, you talked a couple of times about drones, and I think it's an interesting area.
Drones, that's super hot. Bitcoin, drones, and what else? Oh, 3D printing.
I'm just wondering,
super hot.
When do you think drones are going to be like cutting our hair and walking our dogs and that type of thing? How far off is that?
I don't know. Truth be told, we do invest in drone companies, we do invest in photo editing, we do invest in gaming companies. It's just not our main thing. We have a company out of Mexico that's doing remote extreme experiences by watching remote controlled drone video. So you can see this drone like jump down to the Grand Canyon. It's kind of cool. You won't get killed by jumping to the Grand Canyon. Yeah, I mean, low cost enabled flight and video and monitoring can be used for good or bad. I'm sure it would be useful for lots of people. So probably an interesting category to watch. So is pizza delivery online.
Last time when you were in Hong Kong, I remember...
Last time when I was in Hong Kong, what a train wreck that was.
I think it was also organized by Start Hong Kong.
Yes. I was swearing and we were talking about pornography in a church.
Oh yeah, that's what I want to talk about.
You want to talk about pornography? Well, come on up here. Let's go.
was how you emphasized on how important it is that startups have to be sexy, and how you drive people.
That's certainly one of what I was trying to say.
That was something. What you were trying to say, I guess, was to have something that
Probably your pitch was what I was talking about. Was you want your pitch to sort of be sexy. And from an investor's point of view, that doesn't mean that you have to be beautiful or anything. It means you have to look like a nerd. You're like, oh, that guy's sexy. That lady's sexy. Yeah, I'm probably just being incredibly inappropriate here. What's the question?
Just wondering if you're now being more realistic and looking at startups now, because some startups still dream big and they still want to do something that hopefully changes.
So what would capture my attention as a startup if you're pitching me, or what direction should you go as an entrepreneur?
Yeah, because for example, for my startup,
Are you doing pornography startup? I can't invest in those, but
we deal with the idea of death.
the idea of death.
Yeah, we help people manage their online assets after they pass away. So some people may think that it's a really far away idea, but to us it's
big market. Funeral market's pretty big.
Yeah. To us,
also not sexy.
To me, it's a sexy idea, so I'll keep working on it. But yeah.
Makes money. Yeah, we haven't. I looked at a couple of online funeral businesses. Somebody was pitching me, literally, like someone was pitching me just like a couple days ago on a cremation business in outer space. And I was like, well, not my thing, but I guess if you prove the marketing on that, it's like a couple $100,000.
The solar flare package.
The interesting thing about that business is you don't need a lot of customers to make that work. They were trying to sell it on kind of the Virgin Galactic model, where you pay in advance for a seat on this plane, except it's a seat for a dead person. Funeral market, yeah. There's a lot of funeral market businesses. People are willing to pay $3,000 to $5,000, maybe $10,000 for dealing with their dearly departed loved ones. Personally speaking, I think that might be money spent elsewhere better, but there is an existing market for people spending lots of money to take care of ones who are passed on. So from a unit economics point of view, probably a lot of interesting online businesses. Certainly the internet marketing component of that business could probably be done interestingly. And the lead generation value for those customers probably is worth quite a bit. So it's probably a morbid conversation. Yes, or somebody else who's next?
Dave, I guess on one of the slides you mentioned sort of a focus for 2013 is sort of in this region. Just curious to know what kind of things would you be doing sort of to emphasize.
If I'm an entrepreneur in Hong Kong or in Southeast Asia, or what do you mean?
Yeah, I'd say Hong Kong.
Well, I mean, talent is everywhere, so you don't have to necessarily be in the markets that you're going after. You're probably at a slight disadvantage just because there's not a lot of investors here, and the local population size is small. So I would probably suggest that you be looking at either the greater China market, the greater Southeast Asian market, or the global U.S. English-speaking market. Those are probably things that are at least possible from here. Not to be a downer, but I would usually recommend, if you're really interested in going after a specific market, is to get as close to it as you can. So whether that's Silicon Valley, Beijing, Jakarta, I don't know. You can be, development shop anywhere, and the business marketing facing assets locally. You could even do that remotely as long as it's online. There's a lot of gaming companies that exist, wherever. It doesn't matter because they're doing all their marketing online. Capital availability is probably one of the issues to figure out. Where do you get, money from? But there's, a tremendous number of types of businesses that don't require large amounts of capital. Again, when you're listening to someone like me up on stage, just realize that we are focused on businesses that need capital. I'm a little bit less focused on businesses that need large amounts of capital, but that's a function of the size of the portfolio and the work that I do. There are lots of businesses that do not need capital and are positive unit economics right out of the gate. Although probably if you're in one of those businesses, you wouldn't be sitting here listening to me, you'd be doing it. So,
but I guess also from your perspective, in terms of your startup, what would you guys be doing in terms of sort of work spending more time?
I mean, I think there's two frameworks to think about when you're creating businesses. One is do something that you're selfishly passionate about, because it will help, not because that's a greater virtual virtue or anything. It's just that you'll stay focused. Like if it's something that you care about, you're crazy about, or you're driven to do, it'll be easier for you to stick with that when times get tough. The other thing is do something that customers are willing to pay for, either with their time or money. And so those are the two boundary conditions, something you're passionate about, something that users / customers will pay for. I don't worry about market size. I do worry a little bit about unit economics, so that the immediate test in your head should be, what's this business going to be worth to a customer, and what is it going to cost me to get the customer? And if you think that there are positive unit economics that are possible there, potentially at scale, that might be an interesting place to do some product and marketing experiments around. Well, 2 more amazing questions and we'll stop. Your question is amazing, right?
Main.
A lot of pressure. Okay.
Okay. So what do you see as the main challenges for entrepreneurs in Hong Kong or Southeast Asia? And what can anything be done about it?
So the main challenges for entrepreneurs in Hong Kong or Southeast Asia that are unique to them are probably just capital access, at least relative to other markets like, say, Beijing or Silicon Valley, right? If you want a larger pool of capital to raise money from, probably going to Beijing for Mandarin-speaking audiences and going to Silicon Valley or New York for English-speaking audiences, you'll have, more fish in the barrel to shoot at, shall we say, more angel investors. AngelList is making that a little bit easier, but you're still probably at a little bit of a disadvantage. On the flip side of that, you live in a major metropolitan city, so it's not as bad as Cleveland. In the Southeast Asia market, more generally speaking, there's lots of interesting economies developing. Jakarta, Indonesia, Vietnam, Philippines, Thailand. I don't know that Singapore is the best market to go after. It's probably an interesting place to maybe raise capital locally. Probably about the same, maybe a little more or less than here. I think we're kind of getting away from the core issue, which is the biggest challenges for entrepreneurs, is finding a product or service that people give a fuck about and are actually willing to use and pay money for. And from a team perspective, I think the biggest issue is usually for geeky folks who can produce products. It's usually finding a good designer or user experience person, and finding, even more importantly, someone to do that marketing customer acquisition function. I think way too many people focus on my amazing product vision and not testable user metrics that show that other people think it's amazing, and scalable ways to get those customers that actually generate revenue profitably. Like, keep coming back to that marketing function being underemphasized by most entrepreneurs, and there's a reason. That's like, greatest likelihood in you getting to Series A is probably having lots of customers, not having an amazing product. It's almost heretical to say that, but it's probably, it's certainly true in my opinion. One more?
Yep.
Maybe 2 more?
So awesome, 500 durians. That's hilarious. That's his new fund, if you didn't read this. It's 10 million bucks for Southeast Asia. That's going to do like a hell of a lot.
I can either comment
it's not a
on
question.
the existence or lack of existence of our nuclear weapons because of SEC rules, and as much as I would like to.
Smelling nuclear weapons?
Yeah, right, exactly.
So wait, so what are you guys
hopefully we get to do more investment in Southeast Asia. Yep.
Yeah, so what are you going to focus on? Or is there some thesis with that?
Probably us,
with that cash?
Kylie a little bit. He's going to be the primary person we're looking at. But I would say a reasonable amount of emphasis and interest in what's going on in Indonesia. That's the largest population market. Probably some equal amount of interest on the other 4 larger countries, Vietnam, Philippines, Malaysia, Thailand.
Specific types of companies, like you said, financial services?
We are aiming for a lot of consumer and small business services. Been starting to do a lot more family education kind of topics as well. The 3 customers that we think about the most are probably adult, consumer, business person, usually not an enterprise company though, and maybe departments of an enterprise company, and kid or parent or family. So I know that seems like everything, but it's just the reason we think about it that way is we can use consumer marketing techniques to reach consumer and small business. And the dividing line is not consumer business, it's small business and large business, or really it's price point of product that'll kick you into a purchase order or direct sales process. So we want to be able to take advantage of online marketing techniques, things that can be sold online via self-service or maybe via phone or other methods. So those are, in our opinion, easy to scale or easier to scale. Clear preference for path to revenue. So again, what I was emphasizing a lot was not necessarily breakthrough innovation, but process innovation or incremental innovation, just taking an existing business and making it operate more efficiently. And then looking a lot at sort of online customer acquisition and getting good at those techniques. Within those constraints, a lot of different stuff.
Yeah, the question is kind of like a follow-up the Paul's question. One of the challenges that the entrepreneur in Hong Kong facing is getting talent.
Getting talent?
Talent, yeah.
Okay.
Because most of the talent is drive away from tech industry or startup industry to those corporate or other more developed industry.
Yep.
But I see a trend like in US, kind of like startup is getting kind of cool and people flushing in from other industries.
I think you guys all have Silicon Valley-itis. You all think it's like so much easier, better, like across the water.
Yeah.
It's not. It's really, it's more the same than it is different. I mean, there are definitely interesting things that happen in Silicon Valley because of the concentration of entrepreneurs and the concentration of capital. But you can still experience them by reading and talking to those people online. So most of it's in your head. There's a lot of talented people. Like, it's not like you need a lot of money to start businesses these days. So access to investors, only really important after you've gotten the first 6 to 12 months of the experiment under your belt. You can do that on a credit card, your parents' credit card, your own sweat equity, some dumb angel investor here like me that you've been convinced to like give you a little bit of capital, or me 3-4 years ago. Like, it's in your head that it's that hard. Like, you have a challenge in maybe that you are not physically close to larger markets, but if you focus on internet marketing techniques, you're right next door to them anyway, so what do you care? Like, go visit Beijing or go take a flight to Silicon Valley a little bit if you can afford to do so. Go talk to people online if you can't afford to do so. So
actually, the intention is because...
So the talent part of it is mostly storytelling. To yourself and to other people that your business is interesting.
Yeah, exactly.
If you are passionate about your business and your customers, other people will be too.
Yeah, true. True, exactly.
They need to practice telling that story.
Yeah, yeah, true. Yeah.
So, like,
basically,
I know that's not like, you know, easy for you to hear, but like, it has nothing to do with you being in Hong Kong. It has to do with whether you're a shitty storyteller or a good storyteller. It has to do with whether you're passionate about your fucking business or not passionate about your business.
Yeah, I am.
Okay, prove it.
Yeah.
Get up here right now and pitch everybody what your business is. You got 30 seconds. You got 30 seconds.
Okay.
Go. Your life depends on this. Pitch them.
Cool.
Somebody in here might work for you if you're passionate.
Yeah,
What's your name? What's your company?
Actually, I got two pretty good co-founder and...
You got two pretty good co-founders. Awesome. I think he just called you guys crap. He said, I've got two pretty good co-founders. I've got two pretty good co-founders. I'm looking for some better ones.
No, basically my intention is speaking on behalf of the entrepreneur here because people...
Why don't you speak upon your own behalf? Be selfish about this
I'm
moment.
happy with my team. I'm really happy with
Okay.
my team.
You guys think he's awesome? Alright. What's awesome about him? What's awesome about him?
No, basically I just got...
Okay, I will shut up now, and for the next 30 seconds,
No, I want to finish that question.
uninterrupted, tell the audience why you're awesome or why your business
Take the
is
mic
awesome.
away.
Okay, so basically we are, my company is Snapty, so...
Naptees?
Snapty.
Snapty, okay.
So basically what we do is we want everyone to be unique, and we want to empower everyone to design their very own unique t-shirt in a couple of steps over the mobile phone. With photos or your creativity.
Okay.
And yeah, so we will...
I think I've seen you guys pitch before. Right? Don't pitch me, bro.
It's not pitch. So
quick question. It's more than 30 seconds. Why are you better than other t-shirt companies online?
Yes, so basically most of the t-shirt company.
By the way, mic close to the lips, eat the mic.
Oh, look.
You got people to hear the reverb, that's your feedback loop, that other people can hear you.
Okay,
There you go, right?
It's better. So basically, what we unique is we enable you to design your very unique t-shirt and produce even by one piece and pretty quickly.
I'm not convinced by the way you just told that story that you are unique. You should understand that when people hear you, they don't necessarily feel that that's unique. So work on that part of the story.
Okay.
You could say that, hey, we design online t-shirts for people in Hong Kong, and all the other t-shirt makers in Hong Kong aren't online, so we kick their ass, right? Or we design online t-shirts for gay seniors all over the world. No other t-shirt company is doing that. Or we design t-shirts for babies that have profanity on them, right? So like, that would be a unique story. Now, it may not fucking sell, but it's unique and I'll remember it. Right now, you said, I'm unique and awesome because I'm unique and awesome. And we're like, no, I don't fucking believe you. Right? Right? Okay, now by the way, all the rest of you guys who are like ripping on him, you ain't no fucking better. He's the he is the man in the arena. He is the man in the arena right now. He deserves some respect. Even if he fucks up and fails, he's doing more than you guys are by sitting here and laughing at him and criticizing him. So, like, fucking realize that, mother guy.
So give me one more chance, okay?
Give you one more chance. How about, like, give her a chance for a second?
Okay.
Okay.
Okay, so I'm going to start by saying that the statement that you repeated back that Waylon said is actually false. We don't help you, you do it. So the way that we're unique is we break down all the barriers to you to create that t-shirt that you want, and we do one of a kind, one at a time. So it's not bulk, and it's up to you, and you use your own materials, your own thoughts, your own ideas, your own pictures.
Okay.
And
So
it's
what's
done in
different
3
about
steps.
that and Threadless?
Threadless is other people creating. And
You
people
design
phone
your
it.
t-shirt.
You do it in your phone.
What happens if I'm just like shitty at developing t-shirts?
Yeah, the tool help you.
Yeah, we have
Okay.
templates to help you. So we're trying to make it not scary to be
So
creative.
here's how I would do that pitch. Hey, you know what? You want a cool fucking t-shirt, but you know what the problem with that is? You're an uncreative, useless fuck. No design skills whatsoever. You suck at creating your own t-shirt, but you know what? We have awesome tools that make you, clueless, design retarded motherfucker, an awesome designer. And we'll like give you a great t-shirt. That's not exactly the right pitch. It's more like what I did than what you did.
So like break them down only to build them back up, right?
I think you need to attack the point of the customer pain and problem. And what I heard you say is they suck at creating t-shirts without our product.
Exactly.
Right? And so that's the pain that you should be identifying with. You want an awesome t-shirt, but you suck at it. How would you like an awesome t-shirt that you made yourself that didn't suck? We let you do that.
And you can do it on your mobile
Great,
phone.
you can sit the fuck down. You know what? I shouldn't have done this. We should have just done this for an hour and a half. I gotta go. Thank you all for listening for our bullshit for a little bit longer than an hour. I wish you all the success. I don't care if you're in Hong Kong or not. Fucking go create some businesses that people want to use and will pay you for. And if you want to come to Silicon Valley or go to Beijing, great. If you don't want to stay here, that's fine too. Tell an awesome story to yourself and to other people about the product that you're going to create. Because you are awesome, even if right now you might be fucked up and retarded a little bit. All right, give it a shot. Thank you. A beautiful party gift. Photo op.
That's a t-shirt.
Nice.
So excited, look.
How fast can you print? Yes. How fast can you print?
So I think our food sponsors stop there. Casey has the food, right? Oh, okay. So I guess
It's cool.
we're here to. Will Dave stay for a few more minutes? To chat with us, or we can just come and go. Okay. Okay. So thanks for coming.